Good evening everyone, I'm Hetwi Thopani and today in this video I'm going to talk about recent trends in microfinance institution group lending. So let's get started. So moving forward to the next slide, the shift toward hybrid models. This trend reflects the modernization of the joint liability group model by integrating digital efficiency with social accountability, a phygital approach that blends high-touch in-person meetings with high-tech digital touchpoints. Operational mechanism will be in person as well as the digital. In person retains physical rituals like monthly meetings to maintain social collateral, the trust and peer pressure that ensure repayment, and digital uses asynchronous tools like WhatsApp groups for peer support and weekly SMS reminders for repayment schedules. The case study will be microfinance institutions here have reduced physical meeting frequency, allowing members more time for their businesses while using low bandwidth digital channels to maintain group cohesion. Critical safeguard will be the facilitators must be trained to assist members with low digital literacy to ensure no one is excluded from the transition. So moving forward to the third slide, and the second trend will be the integration of credit bureau data, moving beyond purely subjective character-based lending. Microfinance institutions are now utilizing formal data to protect both the institution and the borrower. Why it matters? Individual credit checks help identify hidden over indebtedness that group members might not see, preventing a debt spiral. The supportive approach, instead of using a low credit score for blanket rejection, leading mutual fund institutions use it as a trigger for mandatory financial coaching. Strategic considerations will be inclusion risks. MFIs must remain cautious not to exclude thin file clients who have no formal credit history. Local knowledge data should augment rather than replace the local knowledge and trust built within the group. Privacy will be strict consent processes are required to handle sensitive member data ethically. So moving forward, the next trend, the third trend will be the micro insurance bundling. Bundling insurance with loans transforms a group loan from a simple credit product into a comprehensive financial safety net. Product synergy. Common bundles include life, health, or weather index crop insurance. The stabilizer effect: when a member faces a health shock or a crop failure, the insurance payout covers the loan repayment, preventing the rest of the group from having to cover the default. Success factors will be the simplicity. Claims processes must be ultra simple and transparent to build trust in skeptical communities. Community sensitization. Education is vital to help members understand that insurance is a protective investment, not just an extra fee. And let's move forward to the fourth trend will be the digital repayment and real-time tracking. Digital platforms are replacing paper ledgers, reducing human error and fraud while providing mutual fund institutions with instant portfolio visibility. Technology stack: deployment of mobile money, USSD for basic phones, and agent assisted collection points. Key benefits will be the portfolio quality. Real-time late flags allow MFIs to intervene immediately if a group begins to struggle. Efficiency: digital receipts and automated reminders significantly reduce the administrative burden on loan officers. Operational resilience: and platforms must include offline modes for remote areas with poor connectivity with data syncing once the officer returns to a network zone. And the last slide will be the implementation roadmap. To successfully adopt these trends, MFI should follow a structured progression. Stage 1 will be the assess. Map local connectivity, data availability, and member digital literacy. Second will be the pilot. Run a time-bound trial of one trend, example, bundling insurance in a single branch. Third will be the scale. Roll out across the network with data protection and inclusive safeguards. And fourth will be the iterate. Use KPIs like portfolio at risk and client satisfaction scores to refine the product.